Hi, welcome to this video update, which is on the 12th of October. It's Saturday. Just going to give our update outlook for crude oil today. We're going to the chart in a moment. In recent videos, we're making the point clear that we're extremely bearish of crude oil longer term. Big fundamentals are out and out bearish. Now, in terms of crude oil, we were saying that spike, when the Saudi oil fields were attacked, was a great selling opportunity. And it proved so, with crude oil coming down really nicely. But crude mounted a little bit of a rally at the end of last week. I think if you want to get into crude for fresh positions, the technical setup offers really good risk reward. The bounce is a sell. Now, what we will do is we'll go and take a look at the charts. But just please do keep in mind when I'm giving my views, they are my views as of right now. They can, of course, change in line with the market conditions and action. If you want to learn more about our trading techniques and also get emails of what we consider to be really good risk reward trade setups in respect of crude oil, other commodities, and also currencies, you can join our free mailing list on the link beneath this video. Right, let's go and take a look at the chart of crude oil. Right, on the chart of crude oil, and I'm just looking at the monthly chart very quickly, first of all, before we go to the daily chart, draw levels of entry, stop and target. And on the monthly chart, just to see the big picture, and you can also see my target here, which is 2016 lows. And the reason I'm so bearish is because if you look at the big fundamentals, they're more bearish now than in 2016 from both a supply and demand side. So the big fundamentals heavily bearish. Now, if we do get down to the level, we're moving from 54 to 33. I think we could actually overshoot 33. That is a 40% decrease in terms of price. So a long way to go on the downside if we're correct. Now, in terms of this month so far, you can see we had a little bit of a rally. Now, in terms of big levels, this spike here, that was when we had the record rise in crude oil in relation to Saudi. That spike has failed. I don't see crude getting up to the 60 level. Of course it could. It's at a level of resistance, in my view, right now. And that level of resistance, I'm just drawing a trajectory in, lines up with those three bodies. Actually, my line's a bit thick. But from our point of view, we think the rally is going to fizzle out into the double trend line monthly resistance, and then we are going to move to the downside. So not only a big percentage we're looking for in terms of decrease, our percentage we have to risk is not that great. So it's a good risk to reward trade. Now, in terms of the daily chart, I'm just going to go through why the supply and demand background is so bearish, and also draw my levels of entry, stop and targets. Let's shift over to the daily chart. All right, crude oil daily chart, just do some levels in a moment. But first, I want to go through the supply and demand picture, which we view as out and out bearish. Now here, this is a statement of the obvious for us. It was all over the news wires on Friday. The International Energy Agency says there will be an oversupply of oil next year as it cut its forecast for oil demand by 100,000 per barrels per day to 1.2 million. It's kind of a statement of the obvious. There is ample supply around. That's mostly due to US production. US just increased production over the last few years at a dramatic rate. Okay, it's now producing more oil than it did in the 70s. It's a net exporter of oil as well, and it's got new pipelines to the Gulf saying get its oil quicker into the world market. It's obviously bearish for oil prices, and in my view, you don't want to forget about looking at the rig count, month to month. Look at the big picture and just look at how the US has increased its oil production. It's massive. Now, in terms of a lot of people talk about tightness of supply, they talk about Iran being out of the world market for oil. They're not out of the market at all. They're still selling it. China, for example. Obviously, Venezuela took a hit. The economy and oil production, obviously a big producer, but that's more than made up for by the increase in US production. Also, other non-OPEC countries that are pumping a lot of oil and increasing their levels of production. Brazil would be a good example. and also Norway. Okay, so that's more than compensated. You've got OPEC. They are going to have to really cut production back to make any difference to the supply side, and they're not going to do it in our view, or not do it in a big enough way. Now, in terms of demand side, global economy is obviously slowing. We can see that from the data. China is the biggest importer of oil around, and we know the problems that China's got at the moment. So demand slowing, supply is ample, but speculators still like the long side of crude. This comes from the COT net traders' positions, okay, of what they hold, large funds, large speculative funds, in terms of crude contracts. They've got 333,000 contracts, and each contract is 1,000 barrels. So multiply that up, and that's a lot of oil they hold. It's speculative, okay? And we've got to keep in mind that 80% of the movement in crude oil, in terms of the volatility, is speculatively driven. Now, I've got a feeling that they might get out of those longs. Those longs have decreased a little bit since we last did our video. They come down from 420,000 contracts, which was here. Okay, still reluctant to get out, still heavily long. Why? Generally, big speculative funds. If the stock market is doing well, they'll buy oil as a proxy. So it's correlated with the stock market. The general view is the stock market is doing well. Everything's okay in the global economy, so buy crude. Makes no sense at all, does it? But that's what happens. Okay. So our view is the only thing that could really spike crude oil significantly is geopolitical. So escalations of tension in the Middle East. Again, we can see obviously what happened with that candle there when you get a bit of a geopolitical situation. A lot being made about America bringing in hardware to Saudi Arabia, etc., protect the oil installations. It's precautionary without a big flare up in the Middle East in terms of a really big incident. Crude oil, big supply and demand fundamentals point to lower prices. Now, in terms of the price chart, this candle a lesson in sentiment, really. Biggest one-day rise in crude oil when the Saudi oil installations got attacked. We said at the time that would probably fade. Only all-out war would have seen prices continue to the upside. Very dramatic in the media, 5% of Saudi oil production knocked out. But there's loads of supply of crude to make up that shortfall. And we said at the time, oil installations, look at wars, they don't tend to stay offline for long. Saudis pretty quickly got the production back and a nice move to the downside. Now, in terms of this candle here, coming back to the base of it, okay, and I think, that should provide the first level of resistance. You've also got the 20-day moving average as well. Now, in terms of levels, let's just draw some trend lines in. There's the first one. There's the second. Sorry. So just really that 55 level. Okay, we're just coming up to test it. I just view this as a correction of oversold. Now, what if we were to get through the level next week? Well, there's some optimism about trade talks between the US and China, which could give crude a little bit of a boost up. If it goes above 55, wait and just sell it back through the level. I think the real key resistance level is here, okay, this big red. Now look at these tails. One tries to get back up, finishes red. Another is, basically the bull's trying to force through the 20-day moving average at the time, and that candle, and failing. So that's the second level of resistance. So stop well back from that level. So jump up through there, sell back through the level. You could take topping action off this level if you wished, in my view. What about if we don't rally and go lower? I would just simply do this. Sorry, I'm getting my lining. So basically, you can see through the open and close of those two candles and back through that tail, And I think, yeah, that'd be a sell on weakness. And obviously, if the rally runs on a bit, you can look to sell weakness, yeah, with the rally failing. So yeah, we're pretty bearish at crude oil. Selling that aberration spike gave us a really nice trade, and I think now, this rally just a correction of oversold. I think hopefully, well, from our perspective, because we're short, the big supply and demand fundamentals push crude down, and those speculators, when they start to exit on stop, 80% volatility in crude oil, like I said, is speculative, trigger a big move. The downside, long term, very bearish, going down to monthly support in our view. We'll update crude oil in a future video, but that is the video for today. Thank you very much for watching me as usual. Take care. Have a good day.